We want to think we're very sophisticated, but the reality is you can model us.
80% of emails which I receive say that they have an AI-powered product.
I think we're right now at the point where you can use these generative AI tools to enhance your current job without really replacing anybody. You can get kind of superpowers. You're only constrained by your budget. You fire up thousands of PhDs and trying to be creative, you're going to start creating some new knowledge. Because if there's only a few pockets of people using it and they get to super intelligence and the majority of us don't know what's going on, that's a dangerous situation, right?
People will become more allocators to automatically generated strategies.
Another human being wants to yell at another human being. It's no fun yelling at an AI.
I'm sure you can teach AI to yell at you back. Hello and welcome to Capital Horizons, the podcast where money meets politics. I'm Igor Yelnik. My guest today is Professor Jim Liew, President and founder of SOCAT. Hello, Jim. Thank you very much for joining the show.
It's an honor to be here. Thank you very much for having me. You're my co-author on a
Yes, we have just submitted an article about AI, and this is actually what I wanted to speak with you about. I mean, not about the paper, but about AI. And my very first question to you will be about how do people actually make money by using AI in the investment industry?
That's a very great question, right? So, maybe we can start in the future and work back to where they can make money now. And I think in the future, AI is going to help us personalize, right? Like, we can have a very personal conversation now with chatbots. It knows the conversations we've had. It's great at summarizing information and also being a sounding board. But I think in the future, it's going to become more of like a personal assistant. So very focused to the individual. So myself, I've been teaching for over 10 years. I have 2 kids, one in college, right? And so it could give me personal advice, financial advice, right? That I'm more than happy to sort of pay for and bounce ideas, right? And you'll know where I am in my situation. Maybe like 10 or 30 years ago, I was single, right? So, through my journey and through a user's journey, the AI will be there to give you some advice. And, it could be financial advice. It could be like, maybe as a corporation, your CEO or CFO, and you hear about strategies, Michael Saylor, doing this Bitcoin strategy as a treasury, right? Where they're basically buying Bitcoins. And now you want to bounce that idea. Is that a good idea? AI, what do you think about these things? So as a counselor, to in corporate boardrooms, all the way down to the individual investor, like a personal wealth manager. So I do think that, that's where we're headed. But like right now, where do you make money? That's a great question, right? So I think, for many of us, it's going to be too hard to compete against the Googles and the Facebooks, right? And the OpenAIs of the world. So we're going to take that large language model or that big brain that they've trained, and we're going to use it. And we're going to try to figure out how to use it. And the way that I think about it, and maybe it's too simplistic, but basically, there's a town and the road and the sewer system, that's all LLMs, right? We don't have to build that infrastructure. Somebody already built it. We're going to use that. And what we're going to do is we're going to build stores on top of that, right? And each person can build their own store. So, if you're an investment manager, maybe you're very good at picking stocks, you'll build a store that maybe has a growth agent or a value agent. Maybe if you're a healthcare professional, you'll build a store that will help people sort of use AI to diagnose certain problems. It could be, anything, but it's going to be specific to, what you're good at. Just like on Main Street, right? There's a barber, there's somebody you can buy shoes from, there's a candy store. Because even with all this AI, it's actually very interesting, right? We still long to interact with human beings. Uh, Isn't that
Indeed.
interesting? You could go on a quote podcast with synthetic Jim Liew, have a conversation, and learn up on like,
No, thank you.
why do you need to meet in person? Why would we have to see each other? Because it's fascinating. We can synthesize an individual, like for example, like Eugene Fama, famous,
Mhm.
Picketing Nobel laureate, the literature, their papers out there. You can load it up into the big brain memory and have a conversation yourself. And you can probably make it sound like Eugene Fama if you wanted to and have some kind of picture of Eugene Fama talking to you. But that's not as exciting as actually talking to the real guy, right? And I think what's interesting, it's a little bit like when I played chess. I can play the AI and it'll kill me. It's no fun. I would rather
Well,
play the human being.
you can choose the right level.
Exactly. Well, I mean, it's not as exciting as like sometimes on the side I just play chess just for fun, entertain myself, and I see a flag. It says the U.S. That's me, right? And then there's another flag from somebody else in a different country, and I'm like, oh, cool. I'm playing somebody from this country or that country, right? And it's much more exciting than me playing, AI. AI is going to be so powerful, right? But we still long for that, interacting with human beings, building relationships. And I think what is interesting about this is we're kind of having this moment where, we don't have to interact with other human beings, but we kind of like that, right? That's part of it. So I don't think AI is going to, it's going to help us be more efficient, but I think, in an interesting way, it's going to drive us more and appreciate those human interactions, right? Maybe it's for you, for your investors, right? Or you to find new investors or investors to find you. I think that we're going to have kind of this moment where we're thinking about this and it's like chess. Yes, we can, get killed by some great AI in chess, but we don't want, that's not fun. That's not enjoyable in life, right? Relationships are enjoyable. And I think we're going to start appreciating that more so, especially when all these robots are running around doing a lot of things that, we could do, wash our car, cut our lawn, maybe manage our money. But we'll see. But
Yeah, Jim. But if I bring you back to my question, so when you play chess or when you speak with a smart person like Eugene Fama, you obviously want to communicate with a human being. When you trade in the market, you want to make money. This is the only objective function which you have. Of course, it's nice to speak with a smart colleague along the way, but it's like an add-on. Basically, what you need to make money. So, do people actually use AI currently in order to make money? If we start with the most sophisticated group of investment managers, if we start with, let's say, hedge fund managers, do you think the use of AI is already underway? And if so, how do they use it?
So I'll back up into my old days on Wall Street, as a fund-to-fund manager, and I used to get, the pleasure of interacting, interviewing a lot of these quant hedge funds. And this is, more than 10 years ago. Now, neural networks are around. We knew about neural networks. Everybody did. And at that time, one of the dangers were overfitting, right? The data. So that was like a sin. Don't overfit because out of sample, obviously it's not going to work. And I was actually taught that in graduate school. But what has happened recently is we have much more powerful models, and we have these techniques in order to check if it's overfit or not. So, I think that in the near future, if not already, maybe at your hedge fund or somebody at the hedge funds, they are using AI very much so to analyze earnings calls, look at 10Ks, 10Qs, look at manager discussion analysis, and using that to interpret what's happening. I still believe, and I'm a little bit out of touch, at the cutting edge of hedge funds, that there's still a human being in the loop that's making the decisions, but it's getting a lot of feedback from a lot of different sources. And now one thing that I would mention is that it's, an AI, I believe, will become better than the best hedge fund manager. I think that's in the cards in the near future for us. Now that doesn't mean that the top hedge fund managers with their brands are going to disappear. No, it's going to be there and it's going to be available for certain people who like that type of investing. One example I'll give, we've built some AI tools in the past, and the LLMs just weren't, like 2 years ago, they weren't very good. Yeah, they could summarize the earnings calls and they could summarize manager discussion analysis, but we still had to do the financial modeling stuff because the math wasn't very good. But now it's much, much better. And I think that is what's interesting. Can you synthesize 1,000 earnings calls cross-sectionally and pull out some investment themes that maybe you structure your trade around? And that type of analysis is not possible by a human being. So without an AI, you probably couldn't do that. The other thing that we were playing around with, and this is actually pretty interesting, we took some publicly available information, for Amazon, and we said, "Hey, AI, what should Amazon acquire? Because you have this big cash position, right? So, know the cash position. Now acquire a target. Obviously, let's do a cash transaction." And it would give a couple of stocks. And then we'd say, "Oh, why do you want to acquire that?" Right. And so then now it starts to give you ideas. And so our idea was, oh, this is really interesting. But what if we had a database of private companies? So now Amazon wants to buy a private company, right? Or alternatively, a private company wants to buy a publicly traded company in a certain size. So this whole matchmaking, it's actually pretty interesting. It's like dating. How do you find the right match, right? Right? Amazon has this much cash. This company is here, okay, that's the public company. What about a private company? And what I'm fascinating about, I'm a finance professor. I'm always interested in how financial markets work. What are the incentives? What are the new technologies that are coming out? But I think tools like that could be very useful. Not necessarily that you're going to follow that, but you'll have an idea of maybe who should we interview, who should we dig deeper into, to see if it's a good idea. Alternatively, as mergers and acquisitions kind of clump together. So when the first place guy buys the second place guy or whatever it is, then everyone sort of moves together. And so this could be a very interesting tool that people can use. And I think arguably it's not going to cost a lot to do that. And that's what's really fascinating. But at the same time, those deals could be pretty big. So you'll still need your investment bankers, you're still need your brokers, but some of the research is definitely going to go that way. I mean, yeah, I'm not sure if you played around with some of these you know, the higher end, more expensive, quote, more expenses of was like hundreds of dollars instead of tens or $20 per month, right? These tools, and they're pretty good. I mean, it used to be like a intern, like a summer intern, from college, and now it's like kind of an intern with a PhD who can do deep research. And even really nice because the thought process is laid out, right? The chain of thought, and then the citations of where this quote AI PhD researchers are getting that information. And then we human beings, we review, but it's not a bad way to get to about 95%. The other thing that I'll say is I think, the people who are using AI actively now have a significant advantage. The reality is that when you interact with it and you give it a shot, you can get really kind of superpowers. That's my experience so far. But it's not perfect, that's for sure, right? And it's good at getting prototypes really fast. But if you want to do something in production, you still need to bring in the engineers and the cloud engineers and the architects and check all the pieces of code. And but we are getting to a point where prototyping is very, very easy to do on many different types of industries. That's what my experience has been.
Yeah. So what you're saying is that AI, and obviously you mean generative AI, is good for advising, is good for helping to do some stuff, to summarize things, to code, and to do stuff like that. Okay, that's absolutely fine. And I think that everybody who has the need to code has already tried to use ChatGPT or similar tools in order to help code. Do you think that in the investment industry, there are ways to do something more with the AI than just summarize and help code?
Yes. So I gave I gave a talk at this roundtable. It's a private table in front of a bunch of hedge funds at a prime brokerage shop. And what they were asking is like, how does generative AI disrupt their industry? And how do you even get started, right? So typically in a hedge fund, the investment process is very proprietary and the investors are very proprietary. So they don't want anyone to touch that or get that exposed to anything, right? But a hedge fund is a business. And there's other aspects of the business. Part of it is recruiting, part of it is operations, part of evaluating the people there. And so, what I've noticed is that the hedge fund business, you can think of it a little bit as a stack. Top of the stack is the investment strategy, which is very proprietary, right? And also the investor. So you're not AI is not really going to touch that, right? But they may use it for research, but there's still other parts where the hedge fund is just a business. and you can optimize the business in a hedge fund. So for example, maybe trade reconciliation, it's not that proprietary, right? So if you're doing that manually, you can absolutely sort of, automate some of that. And if there's always the edge cases, you can have AI help or even educate somebody who's doing that. And I think you can be much more productive. That's one example. Another example could be, at the end of the year, you need to give bonuses and reviews. You can absolutely use like a large language model to go through all your emails and see how productive, how, did this person, employee do? Were they responsive? Did they add a lot of value? Give them a whole 360 analysis that's very objective, right? So you personify, you're a top HR person, how is this particular employee's performance, right? And I think that's pretty interesting and defendable. So, at the end, when you're sort of cutting up the pie, you say, hey, you did really well, and this is the reason why, or, here's some places where you could improve for the next year, right? And then you could also use LLMs to say, okay, where do you want to go? Maybe an analyst wants to become a portfolio manager. Maybe a portfolio manager wants to, at some point, run their own hedge fund, right? So, giving some career advice could be very helpful. Now, does that replace the HR person? Well, it depends on the hedge fund, but probably not, because you still need somebody to oversee the process, right? And also have a mechanism when somebody says, hey, I don't agree with this analysis or whatever, what's coming out. But I think it starts the conversation. So I think we're right now at the point where you can use these generative AI tools to enhance your current job without really replacing anybody, but also sort of thinking about it. Another example is like most hedge funds have to raise more assets. So which institutional investors are you going to target? Now, in the old days, you look at a database and you try to sort of figure this out. Alternatively, now, I think what you can do is you can start searching. Maybe you're a long short hedge fund, $500 million, $1 billion, and maybe this endowment over here just needs to replace a manager that does this particular style, mid cap value, right? And so what's interesting is this matching. This is this matching. How do you match more efficiently and talk to those institutional investors and have a need for a mid cap, value long short manager because they just are, they just fired a poor performing one. And so that would be really much help. That would help make these meetings much more efficient on both sides, right? So, I think that could help grow some hedge fund businesses using generative AI. Some people sort of view it as a little bit of a threat, but I think now it's pretty mainstream. It's not like, most people have. I wouldn't say most people. I say a lot of people have already interacted with ChatGPT, and they know what it can do and how easy it is. That's actually very surprising. So, one thing that I'm surprised at is how fast we incorporate this and this technology in our daily lives. I mean, 3 years ago, we wouldn't even
No,
have.
nobody knew about it 3 years ago, and now it's so easy. Uh, yeah, because it was easy to use, right? A very good interface, very easy. You just speak with someone who behaves pretty much as a person, except it's not a person. Speaking about investors, you mentioned investors who might be looking for some kind of managers, but investors, especially institutional investors, have their process. They have their strategic asset allocation, which they do, and they think about it quite a lot, and they have allocations to various kinds of managers. Do you think that something is going to change, or even already changing, in the way institutional investors approach their portfolios? Do they use artificial intelligence?
Well, if we look at the other industries like chess, and Go, and even inside the hospital, analyzing X-rays, I think that the institutional investors are should think about the following, right? If you have a bunch of managers and they quote our value, and then another group of managers they're quote growth, right? And um, can you create like a synthetic value AI benchmark against these managers? So, presumably we use S&P 500 market cap weighted or whatever index it is, but can we create a better benchmark? All right. And I think this is actually a very fascinating question because, if you, generally speaking, institutional investors bucket the equity manager's value growth, fixed income managers, and so forth, right? Maybe you have real estate and private equity and venture. Can you create a synthetic benchmark that the managers have to beat? And I think you could, right? You could say, hey, you are a value investor trained along Warren Buffett, Graham and Dodd, and you do deep research and you follow certain sort of benchmarks. You don't want to overpay, and you lay out sort of the Buffett rules, and say, your mandate is to go after maybe large cap stocks, mid cap stocks, small cap stocks, and you should hold only like 30 or 50 or whatever it is. You put constraints on it and that they're similar to your portfolio managers. They say, okay, let's run this internally and let's compare. Now, if the managers are not consistently beating this thing, and that's a very loaded statement there, consistently beating, are we talking about a couple of days? No, not for value investing. Weeks? No. Months? No. You probably need years, right, for value investing to play out. But
at
that would
least.
give somebody a really interesting alternative to the typical market cap benchmark. And you can play the same game for growth. You're somebody who's been trained by Peter Lynch, or pick all your famous growth investors, and then give them some parameters, right? Is it large cap, mid cap, small cap? And it could even be international, right? You're restricted to only Europe or Asia or the US, whatever it is, and set that up. And I think that's all doable, knowing that institutional investors are constrained on their, size of their team, right? But because of AI, you could sort of set some of these things up and see. And do I think that that would be useful for institutional investors? I think it'll be useful for them to continue to educate themselves and have conversations about the underlying stocks in those portfolios, right? So, my value AI says that we should be buying XYZ stock. What do you think about that? And the reason why my value AI says that is because A, B, C, D, E, F, G, right? And now the institutional investor can engage the portfolio manager on a deeper conversation, right? To challenge, their thought process, alternatively learn, what the AI is missing. So I think it could be a really interesting tool. Um, have I seen any institutional investors do that? I mean, I'm not really in the flow, but for CalPERS to do that, or some Canadian sophisticated pensions, and also in Europe, I think it could make a lot of sense, and I don't think it would cost that much to do. Now, I don't know what your thoughts are. And institutional investors typically are a little bit slower moving and more methodical, and they're a little bit they're not advanced as Silicon Valley and Wall Street, right? They're sort of like coming along.
I don't know. Sometimes it's good to be slow. Uh, and actually, it's quite an interesting point where you're making, because throughout my investment career, I have seen so many fads coming and going, starting from the dot-com bubble, and then a lot of other things, Sparks, 130 by 30 strategies, and so on. I can go on and on. I think that 80% of all sales emails which I receive say that they have an AI-powered product. And when I see something AI powered, I just delete the message, pretty much. But the interesting thing is that some hedge funds also brand themselves as AI powered. Sometimes it's just glorified trend following strategies, and when you look at their returns, you can actually see that it's glorified trend following or glorified carry, or a combination of the two. But nevertheless, it's AI, it's fashionable, and some investors may fall for it because it's a new shiny toy.
Well, I mean, the term AI is kind of loaded because, that's everything from the 1940s and 50s all the way to now, right? So you could run arguably a logistic regression and say you're doing a perceptron, you're doing AI. And okay, yeah, it's defendable because in the early years, 1950, 1960, that's what they did. But, generally when we talk about AI, we're thinking about generative AI in the investment process, right? And so I agree with you. Everyone's doing AI, but you could just have Chat GPT or whatever, Grok on your desktop and just ask a couple of questions about a stock and then quote your got AI in your investment process, right? But I could do that at home, right? So what's the edge? I think what is interesting is that and this is hard for investors too, because not everyone is as technical, right? In order to determine whether this is really AI or not. I think, it kind of, well, just to answer your first question about how could institutional investors use AI, I would say one thing is have AI evaluate your sort of investment process. And, what are your goals and what are your mandates? This is what you're doing. Are you going to sort of reach that, right? Not to change your whole, what you're doing, but just to give you ideas, right? Like, I'll give you, for example, maybe a strategy of the Magnificent Seven has played out. We don't know,
Mhm.
right? But we, human beings and these creators of these financial products, we always kind of overdo it, right, on Wall Street, and so I do sympathize with your stance of getting bombarded by these sales calls, and those things are probably all generated by AI. They're pinpointing
Yeah,
you,
yeah, yeah.
right? And so I think one of the things that I think about some of the times is how do you differentiate yourself when AI is so readily available? You're the manager, your competitor has the same tools as you. Arguably you're trained a similar way. Maybe your value, maybe your growth, maybe like you said, you're a CTA, trend follower. It may be like these are, quote, a finite number of ways to make money in the opportunity set that we see, which is liquid futures, FX, exchange traded securities. So, what if there are only like five factors, like Fama French have sort of identified, and maybe there's only two or
Mhm.
three factors in futures, right? If you want high capacity strategy. I mean, I've worked at one of these large shops, and by and large, moving average crossover with weighting the positions a certain way, it captures quite a bit. And the differentiated returns are correlated. They're very correlated if you look at the monthly returns. And the differentiated returns is how much did you allocate to energy versus, this or softs versus that. And then a lot of it is marketing. We have good relationships with XYZ institutional investor or this sovereign wealth fund, and we've made them money in the past and they trust us. So, performance is important, but there's also other aspects for managing institutional money, and that has to do with trust and the relationship, and the service that they get in terms of transparency into the process. So, y- y- you know, my cynical view is that there's only so many strategies out there, and there are a finite number of them, and sort of the differentiated returns are asset allocation across the different potential markets. And did you have a concentrated book or not a concentrated book, and did you catch XYZ that really did well? But can an AI do that? I think an AI could probably you know come up with something very competitive. So I think the thing that's going to surprise people is when there is an AI hedge fund, and it may be by sectors. I don't know, and it's performing pretty darn good, and it's beating half, 55% of the managers that claim to be doing that strategy. But this is very systematic, or it's just sort of its own AI, trend following, its own AI value, your own AI growth. I think that's going to really shake up the marketplace. And when one institutional investor that's large enough, that's considered the thought leader, goes into that strategy, because the fees are going to be obviously very low, that will be the tipping point where consultants will have to look at that, and then the trend may be not all of your portfolio will go there, but maybe like 10, 20%, or or more. And I think that is for institutional investors, that it's not tomorrow, but it's definitely something they should be talking about now, right? And sort of understanding, because I do believe that institutional investors pay a lot of fees, and they don't have to pay as many fees, right? I mean, I worked in the fund of fund business, the fees on fees business, right?
Mhm.
So I understand the magnitudes of these fees that people charge, and I think it's right for them to sort of discuss that. Um, So, I I I don't know, but it's worth an investigation to see, and it's probably worth having your analysts at your pension fund, fire up some of this generative AI, some of these tools, just to see what kind of portfolios, they would suggest compared to the positions of your current managers. And then there's a great learning aspect of it, and it just starts the conversation. I think that's important to have those conversations internally and debate it, right? I think that's always one of the benefits of, I was an institutional investor at one point in my career, and we had a lot of these conversations. Obviously, we didn't have the powerful tools that exist now, but I think that's one of the real benefits of starting your career or having a career and sitting in that seat, right? Where you get to interact with some of the top hedge fund managers, you get to interact with some of the really interesting tools, even like maybe even if you're on the venture capital side or the private equity side, seeing some early allocations to some of those, open AI type startups. I think that would be educationally very interesting. Um,
Okay, let's switch gears a little bit. All the AI tools are built on data, and we know that they're very data greedy. Basically, we're very limited with the data which has been generated in the last 10, 20, 25 years. When I'm thinking about it as a macro investor, I understand that during these 20, 25 years, there have been not too many economic cycles. Also, we have a very different geopolitical environment right now. The models wouldn't have been able to learn from the past in order to make any sustainable predictions about the future, or would they?
I think you're absolutely correct, right? One of the fun things about finance is if there was no uncertainty, it would be a very boring industry, a very boring.
There would be no industry
There
probably.
would be nothing, right? So it's because of this uncertainty that makes finance so interesting. And there are sort of these concepts of risk and reward. But you're right, right? Who would have predicted what's happening right now? And also, behind the scenes, there's a big AI race, right? And we're all headed somewhere really fast, and we're putting a lot of resources in there. And these are sort of nations doing this, right? And what's interesting is, like you mentioned, data. I think we've realized that you just can't just take everything on the internet and shove it into a big brain, right? I mean, that doesn't work that well, but you can sort of take that infrastructure and sort of, kind of distill the knowledge of a professor who's read all these papers. That's pretty good. So what that means is that if you're going to train or fine tune or even try to get a smaller model that's focused on biology or finance or whatever it may be, right? Maybe in macro trading, or at least as a macroeconomist, you could do that, but you need to put really good data inside of that. So you have to be careful and curate the data, and there's value to having proprietary data sets. Okay, so for example, most institutions and companies and, hedge funds and so on, they have all these internal conversations. You can imagine the conversations that are happening at, Bridgewater. And I'm not picking on Bridgewater, but, they're pretty open about their methodology. And can you get a large language model to sort of, understand how the reasoning occurs in that organization? And I think that's pretty proprietary in that sense, right? So you could probably do it for any organization. And I think that kind of data, because it's a unique data set, I mean, every organization, every company, every business, we do government contracting. They have a lot of really rich information there. Not all of it is useful, but there's probably a lot of things like the institutional knowledge can be captured and used for the next generation, right? So I think probably the hidden sort of the underlying undervalued asset right now is probably the data in your organization, and probably people are not using it, at least in our experience. They may store it, but they don't really, use it as much as they could. So, data is still important. I think we've maxed out the number of parameters, so it's on the order of hundreds of billions and trillions. We don't need hundreds of trillions and beyond that, right?
I don't know. If you asked me 3 years ago, I would have said that even billions is probably way too much.
Yeah, like 100 billion, a trillion. Okay, that's probably enough, right? And because we only have, 50,000 sort of word token things that we communicate with each other, and we're kind of we want to think we're very sophisticated, but the reality is, you can model us, right? And the reality is that we can create something probably smarter than us, right? That's the super intelligence thing that's around the corner. first we got to get to artificial general intelligence, which I think we're headed that way pretty fast. Once you have an intern who's a PhD level, then the intern can probably start generating its own types of knowledge, right? As a PhD student's supposed to be doing, right? Pushing the body of knowledge forward. And then if you're only constrained by your budget, you fire up thousands of PhDs doing certain things and trying to be creative, then you're going to start creating some new knowledge. And once we get there, I think it's just a matter of who's got the biggest budget and the computational power. And, maybe it's a Google, maybe it's OpenAI. I don't know, but maybe it's a Grok or XAI. But I think it's fascinating that we're at this position so fast, right? And I don't think anyone really can kind of predict what's going to happen. But the only thing that I would suggest is that we got to all kind of pay attention to it, right? And you know, in the storybook ending that I have, we are running in this AI race and we create this, rogue AI, but then at the end of the day, humanity has to combine their resources across the world to stop, this thing. And so at the end, it becomes people on people, right? And we have people we're talking about, we have AI, something is going rogue. We sort of save humanity, at least in my sort of wish for what's going to happen. And this is going to affect more so, I think, our kids, right? And the next generation. So I think being vigilant about this stuff is important. I think using this stuff is very important because if there's only a few pockets of people using it and they get to super intelligence and the majority of us don't know what's going on, I think that's a dangerous situation, right? Um, but have you seen that like Facebook is trying to, jump into this artificial general intelligence and super intelligence, and they're offering $100 million to these engineers for 1 year, like signing bonus or something. $100 million. I mean, that's insane, right?
That's inflation.
That's, right. Most people will try to create a startup and then make that kind of money, but you do it in sort of 1 year as an engineer, right? And so, are we in a bubbly territory? Uh, You know, it feels like that, but is the opportunity that great? I mean, I'm always conflicted because I think markets are pretty efficient. So like, when someone's paying you, that's the value. And also like you mentioned SPACs and you mentioned these fads. At a certain point, the market wanted a structure like that. And, I'm looking at some of the SPACs. It's actually very interesting how that sort of occurs. You compare that to an IPO versus a SPAC. And then who are the players inside there and why would they do that in the first place? How are they incentivized? So I think it's a fascinating way to do things. The other thing that I would say is, we didn't really talk too much about sort of financial innovations, but I believe that at least in the US, we have a very favorable administration to sort of move ahead into the crypto space, right? With stable coins and so forth. So, probably the very near future, corporations are going to be issuing their own stable coins. So, an Amazon coin or a Starbucks coin or whatever it is. Pick your favorite company brand that people know. And, the next evolution of that is, can you issue a token for, corporate bonds that are issued by these companies,
Oh
right?
yeah, that's going to happen. That's for sure.
Exactly. So then how do we live in a world like that? And now is there going to be an AI tool that's going to be managing these tokens, across, Starbucks's short-term cash equivalent versus Amazon's longer-term bond, right? And then are we going to sort of see corporations move into kind of like a Michael Saylor, Bitcoin treasury strategy where they're, issuing these things and buying another cryptocurrency like, Bitcoin, like the maximalists, or, will they be buying Ethereum or Solana or whatever it is? These are really fascinating corporate strategy sort of intersecting, sort of the financial innovation. And I don't know the answer to that, but it's going to be very exciting, especially for people who are doing finance research and, even hedge funds. And then how is a hedge fund going to play? There are going to be many more things to get exposure to, right? And they're probably going to be relatively liquid. Yeah, so I think the future of finance and AI is going to be also expanded by the span of the securities that are going to come out from the tokenization process. And by and large, you probably couldn't have predicted that happening under sort of another type of leadership, coming out of DC. So, that's really new, and how aggressive they are down there it's really good for the entrepreneurs, I think. And, ultimately we're going to overdo it as usual, right? We're human beings. I mean, we always overdo it, and then we'll sort of have to put some regulations and guardrails in at some point. But I think it's a very exciting time. Maybe that's why inflation is kind of held check in the US, even though, presumably we're going to try to grow ourselves out of this, right? Um, I don't know. What you're a macro trader. What's your views on the US and the dollar? I mean,
Well, I'm a macro trader, but I'm a systematic macro trader. I
oh,
have a
you're
model.
systematic. You're systematic.
Yeah, so I have a model which tells me what to do and what not to do. In the first half of this year, I've been short the dollar, which was a very good
That's a
position.
good
But
trade. What's your
and
horizon?
of course,
Yeah.
and
What's
of
the
course,
horizon that you're trying to predict? Is it longer term? You mentioned that.
it's longer term. Yes, we trade once a day, and
Yeah.
for our machine learning tools, the horizon is typically in weeks or months,
Oh, okay.
and for our longer models, it's in months or years.
Oh, that's nice.
So we're very slow. We're embarrassingly slow, I would say.
But your macro strategies are FX and then futures.
FX futures, yeah,
Okay. Okay.
all the developed countries, everything very liquid, and yeah. So
What does it say about the US? Are we overvalued here, or are we going to see that sort of?
yeah, yeah, of course. I mean, the US has been overvalued forever. The problem is it was very difficult to make money out of this position, also forever.
But is but
You
is
know,
but isn't it true there's only, like, a finite number of investment strategies? I mean, you can twist it and turn it whatever you want, but the reality is you have some carry trade, you have some conversion, you have some divergence, and there's some momentum, and then you have these premiums, whatever you could argue, whether they are, efficient because you're taking risk, or they're inefficiencies in the market. And then the hard part is you have these spikes, and then you're like, oh, you don't know when those spikes are going to occur. That's
you
really
know,
hard to predict.
I'm not very concerned about the limited number of investment strategies,
Okay.
because there are only 7 notes, but how many songs can you write?
Oh, I like that. I like that. There's only 7 notes, but how many songs can you play? So do you think the future of hedge fund will be like, you know, people being able to tap on these notes, right? Very quickly. So imagine you had an AI that could play these notes, right? And then it
Yes.
goes, the regime switch, go play these notes. Because right now, the institutional investors, they allocate to managers, right? They can't really disallocate or pull their money back or tell them to go to cash. So maybe one thing that is going to occur is you have these notes, and the AI is going to be able to play, and it's going to see the regime and be able to switch very quickly for the institutional investor. Maybe it's an overlay strategy. I don't know.
Yeah, in theory, this is possible. In practice, this will be constrained by the liquidity of the markets and by the legal terms of the investment vehicles where investors put their money. But if there is demand for high liquidity vehicles, then obviously there will be more of them, because for most strategies, especially for smaller managers, usually liquidity is not that big of a problem. Yeah, with regards to the use of the AI, I don't think it's only about coding, which obviously everybody is using, or about summarizing. You can also try to create AI agents which will be developing strategies for you or mix strategies together for you. I know that people have, and they claim some good results. Where these results are really good remains to be seen.
Everybody that you meet in the hedge fund industry, it's kind of funny, and this is a cynical view. Everyone's like, I got an advantage. I have an edge. And you're like, okay, what's your edge? But you hear the same edge like many, many times, and you're like, okay, I'm not gonna be rude to this person, although I've heard this edge before. So I'll just nod my head and sort of write down my notes. But I think what's interesting is sort of it's always a very exciting space. I think hedge fund managers are very honest. They're like traders, right? So you ask them straight up, they'll answer you. But the innovation, I think that they've sort of caught on in a sense. Yeah, I don't know what your experience has been on the systematic side.
Well, hedge fund replication has been with us for at least a couple of decades, and clearly some hedge fund strategies can be easily replicated, but
Yes.
the devil is in details, and you don't pay 2 and 20 for something that can be easily replicated. You put it for those little details which surround those easily replicable things. And everybody can buy S&P 500, but in a truly institutional process, when you do something about it, when you put your controls, when you put risk management strategies around it, actually people trade quite complex strategies, which may seem to be very easy to explain, but in reality they're quite complex. And
What I notice is like some people in the hedge fund industry and managers, they're kind of wired differently, right? I mean, their thought process is very independent from, what the market says, right? And they have a lot of conviction. And it's interesting how if you look at how their brain works and how they justify certain things. And I think it's I think it was like Ken Griffith or something. He had some kind of interview and he was saying that his, like, long short managers are only, I think it's like 55% correct or 54% correct. So they have to stay in those positions and have a lot of conviction, even if their positions are going against them. I think that takes a lot of fortitude, right?
yes,
Right.
it
So,
does.
that I think is, you have to applaud that. And I do think that there are people out there with skill, but the majority of people say they have skill, so it's hard to discern what's skill and what's not. But there are, I mean, there are Warren Buffetts out there. There's Julian Robertsons. There's guys who are, very talented and, when I say guys, I mean, hedge fund managers, male, female, whatever it is. But I do think that the strategies like you do systematic, there's discretionary, there's a nice way to blend them together into a portfolio. That's so you get a diversification. And then the other thing is, I'm always curious, do you think an AI would be able to do the asset allocation, just as good as a portfolio? I mean, a CIO of a pension fund or an endowment. I know they don't have those tools to do those kind of move the allocations that much, but there's some ability to tactically move back and forth, and maybe that's a product that's needed in the industry, right? So, for example, hopefully there's peace around the world, and hopefully that's going to be bullish. Hedge funds tend to make money in volatility. Can you turn it on the dial if there's sort of announced peace? I don't know the answer to that, but for an institutional investor, I'd probably want that trigger, right? To make that kind of allocation decision quickly. Um, I don't know what your thoughts are on that. I mean, presumably you have a lot of institutional investors, right? So you're interacting with these guys all the time.
I don't think that people have already started using AI for asset allocation. I think it's possible, but for now, as you suggested, it's more like a helper rather than a decision maker. And in my view, this level of delegation to AI is going to increase over time, and the role of discretion is going to change. People will become more and more allocators to automatically generated strategies. In the end of any very sophisticated process, in the end of very sophisticated systematic strategy, there is always a human being, and that's not going to change.
Yeah, I agree with you. We'll have a lot of AIs around us and agents proposing strategies, but at the end, I think a human has to sort of be responsible for that. And I think the reason why is, another human being wants to yell at another human being. It's no fun yelling at an AI. Why did you make that allocation? That was ridiculous. Don't put any mortgages in the portfolio anymore. Okay, okay, I'm sorry, board, right? So, somebody has to be responsible. And so I think, it's no fun yelling at ChatGPT. You don't get that response back.
Well, I'm sure you can teach AI to yell at you back.
um,
Shouldn't be that difficult. Anyway, Jim, it's been a fascinating discussion. Thank you very much for it.
Congratulations on our co-authored paper. I think that it will really stir the industry. I don't know if it'll be published or not, but we submitted it. But the idea there, I think, is super interesting, right? How is AI affecting, money management right now? And, I just like to thank you for spending time with me. It's always great to talk to another human being.
Thanks for listening. This has been Capital Horizons.
So if you would like to see or learn more about Capital Horizons, please subscribe below.
From Michael and I, see you next time.